You have got $100 sitting somewhere right now. Maybe it is in your savings app earning basically nothing. Maybe it is in a stablecoin collecting dust. Maybe it is in your pocket right now. What if I told you that $100 dropped into one specific altcoin, Kursingstein, a dear 10 cents, could realistically become $500 before 2026 ends. And in a more aggressive but not impossible scenario, that same $100 flips into 1,000. No, I am not selling you a course. No, I am not promoting a meme coin with a dog on it. I am talking about Hedera, ticker HBAR, a project that has one of the most quietly compelling setups I have seen on a long-term chart in months, and the math I am about to show you is so clean and so simple that you are going to wonder why nobody walked you through it sooner. Stay right here. This one is worth your time. What is good, everybody? Welcome back to TJ Crypto World, the channel where we do the actual work, show you the actual numbers, and never dress up speculation as certainty. I'm TJ, and today we are talking about a scenario-based breakdown of Hedera HBAR that I think is one of the most honest and practically useful frameworks I have come across for evaluating a low-price altcoin with real infrastructure behind it. The original analysis comes from a YouTube creator called Crypto A-Man, who built a simple but genuinely useful model around a $100 entry into HBAR at current price levels. I'm going to walk you through his framework, add my own original analysis on top of it, and give you the complete picture. Bullish case, bearish case, and everything sitting between them. If you have ever wondered how to actually think through a small position in a low-price altcoin without losing your mind to hype, this video is exactly that. Let's go. Before we get into the price scenarios, the RSI reading that is turning heads on the all-time chart, and what the macro environment in 2026 could mean for HBAR specifically, let me tell you the detail that jumped out at me the moment I started researching this breakdown. HBAR once traded at 60 cents, that is its previous cycle high. Today it is sitting near 10 cents, that is an 83% drop from peak to current price. Now here is the thing most people get wrong about that number. They see 83% down, and they panic. They assume the asset is broken. But Crypto A-Man's argument, and I think he is right, is that when a fundamentally solid project resets that deeply from its high, it does not need a fantasy moon scenario to deliver serious returns. It just needs to partially recover what it already proved it could reach. That reframing changes everything about how you assess the risk-reward here, and we are going to dig into exactly why. Keep watching. Let's start with the framework Crypto A-Man built his analysis around because, honestly, it is genuinely one of the cleaner ways to think about a small position in a low-price altcoin. At an HBAR price near 10 cents, a $100 investment buys you exactly 1,000 HBAR. That is the starting point. Clean, round, easy to track. And from that base, the future value of your position depends entirely on one variable, where Hedera price goes from here. Crypto A-Man laid out 4 distinct price scenarios, and I want to walk through each one with you not just as numbers, but as real probability-weighted outcomes. The bearish case places HBAR at 5 cents, a 50% drop from current levels. At that price, your 1,000 HBAR is worth $50. You have lost half your position. That is the downside scenario, and it deserves acknowledgement up front because, honestly, anybody who tells you there is no downside risk in crypto is either uninformed or dishonest. Hedera is not immune to broader market weakness. The neutral case places HBAR at 20 cents, a doubling from current price. Your $100 becomes $200. Not life-changing, but a 100% return from a $100 position is a 100% return. In any other asset class, that is considered an exceptional outcome. The bullish case targets 50 cents, a 5 times return from current levels. Your initial $100 becomes $500. That is the kind of move that gets people genuinely excited about altcoins, and honestly, it does not require HBAR to do anything it has never done before. The asset has already traded at 60 cents. Getting to 50 cents means recovering to just below its previous all-time high. And then there is the most optimistic scenario, $1 HBAR. At that price, your 1,000 tokens are worth $1,000, a 10 times return on a $100 entry. That is not a number pulled from thin air. It is a number that reflects what Hedera would need to look like if it captures meaningful market share in the enterprise blockchain and tokenized real-world asset space at scale. My take on this framework, what makes it useful is not that it tells you which scenario will happen, It is that it forces you to decide, before you put in a single dollar, which scenario you are positioning for and whether the risk profile of each one matches your personal situation. That is how disciplined investors think. Not will this go up, but what are the realistic outcomes and can I live with each of them? Here is the part of Crypto A-Man's analysis I want to expand on with my own context, because I think it is the most underappreciated piece of the entire argument. HBAR's all-time high was approximately 60 cents. Current price is near 10 cents. That gap is not just a psychological data point. It is a structural one. When an asset trades at 83% below its previous peak, several things are typically true. The speculative froth from the previous cycle has been completely wrung out. The remaining holders are predominantly long-term believers rather than momentum chasers. And, the incremental buying needed to move the price meaningfully is actually lower than it was near the top, because market cap at 10 cents represents a fraction of what it was at 60 cents. Crypto A-Man's argument is that this deep reset reduces the probability of catastrophic further downside from current levels, not eliminates it, but reduces it, and that asymmetry between limited further downside and significant upside potential is exactly what makes low price, post-cycle reset assets worth serious consideration at specific entry points. What I would add to his analysis is this: the reset only matters if the underlying project is still building and still relevant. A project that has collapsed in price because its technology failed or its team abandoned it deserves to be cheap, but Hedera is not that. Hedera processes thousands of transactions per second. It has enterprise partnerships. It has a governance council that includes Google, Belside, Indeld the Nautris, Inbubo, IBM, Boeing, and others. The price reset happened in the context of a brutal macro environment for all crypto assets, not because Hedera stopped being useful. Let me talk about the technical dimension Crypto A-Man spent time on, because it adds important weight to the fundamental argument. According to his analysis of HBAR's all-time chart, the relative strength index is currently sitting in deeply oversold territory. RSI below 30 on a long-term time frame is not a common occurrence. When it happens, it typically reflects a market where selling pressure has been sustained for so long that the asset approaches exhaustion, meaning the sellers who are going to sell have largely already sold. Crypto A-Man compared the current RSI setup to two previous moments in HBAR's history that showed similarly weak readings: the 2019 launch phase and the period following the FTX collapse in late 2022. In both cases, Hedera price recovered substantially in the months that followed those oversold extremes. Now, and I want to be precise here, past pattern repetition is not a guarantee. Markets do not move in perfect cycles, and historical RSI comparisons are directional signals, not crystal balls. But when a long-term oversold RSI reading coincides with a price sitting 83% below its previous peak on a project with genuine enterprise traction, that combination of signals is worth taking seriously. One final layer to this analysis that Crypto A-Man addressed and I want to build on. The broader macro environment in 2026 is shaping up as a potential tailwind for assets like HBAR. Potential rate cuts in major economies increase appetite for risk assets. Growing institutional participation in digital assets, particularly through regulated products, creates new capital channels. The advancement of digital asset legislation in multiple jurisdictions reduces regulatory uncertainty that has historically suppressed altcoin valuations. And specifically for Hedera, the conversation around real-world asset tokenization and enterprise-grade blockchain infrastructure is accelerating. So, Hedera's positioning in that conversation, backed by its governance council and transaction throughput capabilities, means it sits in exactly the sector that institutional capital is beginning to take seriously. Now, whether that translates into price in the time frame we're discussing is uncertain. But, the directional alignment between Hedera's technology focus and where enterprise blockchain spending is heading is not something to dismiss casually. Right here. If this breakdown is giving you a more structured way to think about HBAR than anything else you have watched today, hit that like button right now. It literally costs you nothing, and it helps more people find this content. And if you are not yet subscribed to TJ Crypto World, tap that subscribe button and ring the notification bell. We break down altcoin setups like this every single week. Back to it. Before I close, nothing in this video is financial advice. I am TJ, a crypto analyst and content creator, not your financial advisor. The scenarios discussed are educational frameworks for thinking about price outcomes, not predictions or investment recommendations. Do your own research. Assess your own risk tolerance. Your money, your decisions, your responsibility. All right, family. That is the full HBAR breakdown. A $100 position at 10 cents gives you 1,000 HBAR. A move to 20 cents doubles it. A move to 50 cents turns it into $500. A move to $1 makes it $1,000. And behind those numbers sits a project trading 83% below its previous high, with deeply oversold long-term RSI, enterprise-grade infrastructure, and a macro backdrop that is becoming more favorable for digital assets heading into the second half of 2026. Is it guaranteed? Absolutely not. Is the setup worth paying attention to? Based on everything in this breakdown, yes. Drop a comment below. Are you holding HBAR right now? What is your price target for 2026? I want to see what the TJ Crypto World community thinks about this one. Like the video if it delivered, subscribe if you are not already part of this channel, and the video sitting right on your screen right now connects directly to everything we just covered. Go watch that next. I will see you in the next breakdown. Stay sharp, stay curious. TJ Crypto World out.